Hey everybody, welcome to Copycat Trading, and today is the daily analysis video for Monday, January the 8th, 2024, and what a day it was. The S&P 500 was up 1.43% and the NASDAQ was up over 2% today in heavy trading, and actually in fairly light trading. We had fairly light volume today. As you can see on the spider, we had 74 million shares, which is fairly light. Over 100 million, it would be considered heavy. But today we've got fairly light trading, but during this time, man, it just rocketed up, and it just really did not stop from the time that it opened to the time that it closed. Here's the open right here, and we had a slight gap up, and then as you can see, it just very few red candles just went up, stayed above its 20 MA the entire time, didn't even come back and touch it one time, and just went up in a straight line almost. It's not real healthy market action, but it did give us that bounce after so many days of coming down. I knew that we were coming in for a bounce of some kind. I thought we might make it down here to the 236 or 25 retrace, but we never did. But we did come in on the QQQ and touch the 236 and 25 retrace almost perfectly, and that's where we got the bounce on the QQQ. So the technology stocks were super hot today, one of which was Apple. Apple made a really good comeback after hitting its 50-day MA, and I'll show you that chart right now. I might have some markings up there. Let me get it right up here. And it hit its 50-day MA. Let me erase some of these drawings. And this is all paper trading and stuff I mess with. It's not anything that has to do with my actual accounts. But it came through the 50-day MA. But let me show you what else happened. It hit the 200 MA almost perfectly. And for those of you that have done any kind of work on technical analysis, know that 200 MA is a brick wall, especially if it comes right into it. And so it came pretty close to into it. That is what's called an in spirit of kiss, or an in spirit of touch, and boy, it just rocketed right off of that. So put a lot of people back in the money that were going long on Apple as it did its fall. But the QQQ was super strong today, and we can probably from this move expect further upside. I would venture to say that the all-time highs are in the sights of the QQQ and the spiders based upon this move, but we'll have to see. The spiders have a little bit further to go. If we check out the spider all-time high, we're up here right about in there, about 498, and the previous high that we had was right around 477. So we've got quite a little bit to go on the spiders, but the QQQs can easily make an all-time high once again. Checking in on the Russell, we pierced the 20-day moving average and have caught a good bounce up there. We've recaptured the 20 MA, so we're doing really good. Excuse me on that. Recapture the 20 MA, so I expect further upside on the Russell, probably to this gap. The Russell's the one that's probably been the laggard, and we're nowhere close to the all-time highs. So you can see the all-time highs here, and the Russell would have to go all the way back up to here in order to capture its all-time high. However, the spiders and the QQQs are just within running distance to it. So the laggard here with the Russell's not near as strong. These are all the small caps. As to remind you, there's 2,000 stocks in here. Russell 2000, that's the name, and it's probably going to go up here to one of these places here and probably either stall and come back down, in which case we'd expect a low down in here, which means that if the tech sector does not keep us up, we'll have a pretty good fall in the overall market, or it's going to go up and it'll probably wind up going up to this pivot high right around in here. And that would be a shorting opportunity as well. These areas right in here, as you can see, there is tons of resistance at this area. So your targets are going to be up here and then back down here, probably short term in this area right in here. So that's the Russell. As far as gold goes, nothing has really changed. We didn't have really much of an up day. We had kind of a slight down day, almost kissing its 50-day moving average here. Not much to say about gold. Still has its inverse head and shoulders pattern, with the neckline of the inverse head and shoulders almost being the tag of the all-time highs. So the neckline actually would be drawn in here like so, and to go across like so. And as you can see, it has not triggered yet, but the moment that it triggers, if it goes up through here and it triggers, we have quite a bit of upside that we have left in the market, potentially. All right, so there's there, and then the silver chart, just showing a little bit of a bear flag here on the silver, and we actually have a regular head and shoulders. The gold, if I misspoke, is an inverted head and shoulders, to where it actually has its shoulder, head, and shoulder here, showing that the head is at this point right here, going to the neckline. The way you measure it is you take your distance from the top of the head and you draw the line to the neckline, and then you take that number or you take that point and you put it right here where it would break out at the neckline of the shoulder right there, and that's what your target would be. And so that's played out multiple times, but I will say this, head and shoulders patterns have a tendency to fail about 50% of the time. So they're not very accurate, but whenever they do trigger, a lot of times it does predict the up or the down move fairly well. All right, so when we get back to silver, silver, like I said, has got got a regular head and shoulder pattern on it. So here's the head and shoulder pattern of the silver chart, and it starts here and it makes its way up this way, and it has not triggered yet either. And so you can see the head and shoulders pattern here. A head and shoulders pattern is not viable until it closes below the line, and has not closed below the line just yet. So if it closes below the line, you can see the down move that it might have. And if silver comes down here around the $20 mark, somewhere in there, probably around the $20 mark here, it'd be a great buying opportunity, and probably a buying opportunity that will last for quite a while. So silver has got this head and shoulders pattern, and it's looking like it's making a bear flag. It possibly could come down even further. Natural gas had a huge pop again today. Really good run today, and cut up here to about the 284 area, and then this resistance area slammed it back down. As you can see, we had quite a bit of a fall early on this morning, and then we raced back up. Really good bounce back, so you can tell there's a lot of buyers that are coming in here, quite a bit of volume coming into natural gas. And natural gas has got this upsloping trend, or upsloping higher lows and higher lows and higher highs. And so we could look for further upside probably in the next few weeks, but not before it has a backing off period. It definitely needs to back off if it's going to be a healthy run. So it's going to have to come back probably to this area, and that will be a good buying opportunity. At least I'll be jumping on board at that point, and then continuing up. As far as U.S. oil goes today, we had quite a bit of a slip down of the U.S. oil today, and if it takes out these lows here, we might get all the way down to about $55 to $60 a barrel. So if it takes out these lows here, watch out below. This is a stock that could fall a commodity that could fall quite a bit. So you can see this support line right here, and if it does fall down below, it could go a lot further. As far as Bitcoin goes, we got a big pop with Bitcoin broke out above this trend line. We just noticed it we talked about it yesterday in yesterday's video. This has been the high for quite some time. It's just stayed in this range, and it appears to have broken out. Now, if we're looking for a high, or if we're looking for the next target in this, let's take a look. We'll switch over to our weekly chart, and if we look at the next place, the 618 retrace is just right up here, and there's quite a bit of pivot points right up in here that it probably is going to have a little bit of trouble getting through. The only reason why I say probably is because under normal circumstances, I would say this would be true, but under the circumstances of possibly that ETF getting approved, we might be able to make it up there to that line and shoot through it momentarily. Now, we might make it as high as 55,000, but we'll probably come back further, or we'll probably come back after that. It'll probably be a sell the news event. I will not be playing that just because it is Bitcoin and it can get a little bit crazy. So I'm not going to worry about playing that, but that's probably what will wind up happening. As far as the SMH goes, let me erase some of these lines. This is all from today. SMH, it had a really good pop as well, and it will probably make it up to this place right here, this gap here, before pulling back, and that would be a natural pullback. But you can see it has a higher highs in this chart, but we also have a higher low, so we're still in an uptrend, a good solid uptrend. So respect the chart on the SMH. And the rest of these things I'm not going to go over. The 2-year, the Dixie, and the 10-year, those affect how things operate, but those are a little bit too complex for me to put in my daily briefings. All right, that is it for today. And if you got any questions or comments, please put them in the comments below, and I'll be glad to address them if I can. And until then, this is Copycat Trader, and I am going to be signing off. Have a great day, everybody.